Hi, I don't know if you can see this clearly. This is a live trading account. I deposited £100 3 months ago. I withdrew 300. You see the account is currently at 808. So I paid just over £1,000 in 3 months, which isn't bad with a £100 investment. Started off trading, risking just 30 pence a pip, risking 100 pips and £30 each trade. Now I've taken £50 profit out of both those, and as you see, Audi New Zealand is currently at £70 profit and Euro Australian is at £70 profit. Now the reason why I took £50 profit after 100 pips is to protect myself, because I risk 100 pips per trade and I don't want to lose the whole lot if it moves against me, because if it did I'd lose £150 per trade. This is Gecko, a live account, and now we move to charts. Other good platforms, well, I like IG Index I use, and also I like fin spreads. Right, let's look at my charts. This is a good chart. Now the purpose is to talk about systems. Now you could buy lots of different systems. Some are okay and some are bad, but no system will ever work consistently just following it. If you've got rules like, for example, different Forex systems range from say £10 up to thousands of pounds, the courses. And you buy them from eBay, you buy them from the internet, you can buy them direct. And a lot of them use things like they have a 50-day simple moving average. That one there, let's have a look at it. It's a 12-day exponential moving average. Exponential means it's more weighted to more recent price activity as opposed to a simple moving average, which just, if it's a 12-day, it divides by the last 12 days. Right, so an example of a Forex system crosses a 50-day simple moving average, a stochastic apps buy. They might use it for intraday 30-minute charts. I only do daily charts, which is EOD. Other systems, they may have two EMA, say one 15-day and one 35-day. When they cross, it indicates a buy. So Ian Williams courses are based on the crossing of moving averages, and they're popular. It won't get you rich, you might make a tiny bit of money, you won't make much. And then other things like, you might see something like here, look, it's gone down and then for 3 days up you've had 3 black bars up, and it crosses the moving average on the 3rd day, and you know, often it will continue. It's had a quite strong movement upward if it goes above that 3rd day. This time here it didn't go above that day, so there's no trade, and then the next time it did. But you won't make good profits if you think you can follow any type of simple system. And the same things like looking for certain patterns like head and shoulders, looking for support and resistance. All these types of systems for sales, nothing's going to work long term, because you need skill and you need empirical knowledge. You need to really understand charts and know what's good opportunities and what bad, and how to effectively use indicators. Now, how did I become an expert at trading? Well, I've traded for years. It's only in the last 3 months I've got really good at it, and it's all thanks to one man. We'll just have a look. Right, we'll go to Amazon, and then we'll type in Robert Miner. There's lots of good books on trading. Just type in technical analysis on Amazon, but this is by far the best. It's called High Probability Trading Strategies, and what it does, gives you a good introduction to Elliott Wave, good understanding of technical analysis and Forex trading, and how to use multiple time frame strategies. That's the key to making money. And I'm not going to go into detail of the book. You need to buy the book. So it's only £26. And once you've read it, you can sell it on eBay and more or less get your money back. Right. In the last 3 months I've had 25 completed trades. That means they've actually closed. I risk 100 pips per trade, and I always go for 2 to 1. And once it goes over 100 pips, I might usually close a third of it, just to protect myself. And out of the last 25 completed trades, I've had 18 winners. Now I don't expect that to continue, but in the long run I always have over a 50% strike rate. If you try and trade like 30-minute charts or hour charts, then you're not going to make any money because it's just so ridiculously volatile. I'll show you one. There's a 15-minute chart, and that's what it's like. It's absolutely all over the place, you see. And look at that, you see a nice pattern developing and then a strong retracement. So a fantastic way to lose money. So I don't like those. Anybody that tries to sell you a system saying you're going to make money on 15-minute charts, well, it's like saying I'll sell you a system to win on the horse races, I'll give you lots of 6 to 1s. It's just ridiculous. Right, so I can talk a little bit about what to look for, what I look for. I like to buy after a wave. I like to see a higher high here and a lower low, and there's the wave 1. I like to see crossovers of stochastics. I want to go into exact detail of my methods. And there's a good place to buy after a 5 wave, and then it retraces. Also I look at the weekly stochastics as well and what's happening there, and I wait for wave 1 to complete, and then I buy just at the bottom of wave 2. Look for ABCs after a major wave 1, that's a 5 wave trend, and then look for a stochastic cross, look at multiple time frame strategies, and I use mini trend lines as well to help me ascertain what part of the wave pattern it is. And so I can make money wave 1, 3 or 5. 3 is generally the longest. I should really go for 300 pips profit, as you see there. I bought a trade. I bought at 13867. I risked 150 pips because it was such a big bar. It's very rare. I usually risk 100 pips, and it actually went 650 pips. Now I'm not greedy. I just go for 2 to 1. Do I keep moving my stop loss up? No, because in the past I could have made much more, and often because it is a volatile market, it retraces. It goes exponential moving average is a very good way of managing it if you want to do that, but I prefer to get 2 to 1. I'll talk more about Elliott Wave in my next lesson. Bye.